This week, the stock market continued to falter and interest rates continued to climb amidst the lowest consumer confidence index we've seen in decades. Hey everyone, I'm Tony with Clarkson Santoro, and this is our real estate update for September 23rd. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those numbers mean for you as a homeowner or as someone looking for a house that you will love to call home. The current inventory is 50 homes, down from 51 last week. The average asking price of those homes was $1,919,000, which is up from last week's average of $1,877,000. 7 homes asking an average of $1,964,000 went pending this week. That is less pending homes than last week's number of 12, with a lower average asking price from last week's $2,017,000. A total of 13 homes sold this week with an average sales price of $1,697,000. That average price was down from last week's average of $1,818,000, and the total number of sold homes was lower than last week's 22. So now that we know how our market performed this past week, let's look at the key metrics that we track to help us understand how the San Ramon real estate market is performing and where it might be heading. First, let's look at inventory. This is one of the statistics that has had the biggest swing in the past 9 months, being as low as 2 homes at the end of last year and as high as 118 homes just 2 months ago. If inventory stays around where it's at now, in the 45 to 55 house range, then this market variable doesn't favor either a seller or a buyer. Since the inventory level didn't change dramatically this week, we are leaving the score at 50, which is the same as last week. The next market indicator relates directly to the inventory level, and that is the market turnover rate. This metric allows us to track supply and demand ratio in San Ramon. Anything greater than 1.0 means that demand is outpacing supply, whereas the opposite is true if the turnover number goes below 1.0. This number provides better clarity about buyer interest than inventory level, and this week it dropped again to 0.80. So, although inventory levels continue to drop, the demand for homes is dropping even quicker as buyers are looking at broader economic trends. Last week we lowered the score to 47, and this week we are lowering it again to 42. The over-under asking price is the next indicator that we track. This statistic has remained in the 2 to 3% under asking range for the last month and a half. That is well within the standard deviation for our historical San Ramon market, which has seen homes sell on average for about plus or minus the asking price for the past few decades. The current under asking price just feels more dramatic right now, coming out of the crazy hot market we saw in 2021 and early 22. If sellers and buyers are matching expectations, that number should stay around where we are seeing it now. But if the market continues to soften, we might see that under list price increase in the coming months. Last week we gave this indicator a score of 45, and this week we are leaving it at the same number. The last statistic that we watch to track the health of the market is the average sales price. That average price has been coming down for the past 5 weeks. We did expect to see it jump up a little here in the next week or so, but with the latest developments in the economy, if the average does come up, it will be temporary. This statistic does lag behind the actual movement in the market because sales price is all but determined 30 days in the past. Last week we gave this indicator a score of 58, and this week we are lowering it slightly to 57. We have 2 more trends that we pay close attention to, and these help us predict and prepare for where the market is heading. The first of these 2 is the strength of the Silicon Valley tech industry. The stock market has continued to falter this week in reaction to the Federal Reserve actions and inflation numbers. The Triple Q fund that we monitor, that is tied closely to the tech industry here in California, suffered along with it, falling another 11 points. This plays a significant role in our market, specifically because a large percentage of home buyers are employed by those tech companies, and as they suffer continued uncertainty, our housing market suffers with them. This week, we are decreasing the score for the indicator from last week's 35 down to 33. The last indicator that helps us predict the housing market's future is interest rates, and they continue to rise this week. We are now sitting at a national average of 6.29%. That is more than double where they were at the end of last year. As the cost of money increases, buyers will be able to afford less and less, which will also force homeowners who need to sell to bring the price of their house down. Last week, we gave this indicator a score of 36, and this week we are lowering it to 32. Overall, this week has brought more concerns about our San Ramon housing market. With the economy slipping, consumer confidence at an all-time low, and interest rates climbing, it is almost certain that we will see the housing market continue to cool down. Inventory staying low is the one metric that gives us hope that we will be facing a plateau instead of a cliff. Last week we scored the overall market at 42, and this week we are lowering it again to 38. For sellers, this means my recent statements remain true and even more important. To sell your house in this market, you will need to make it an irresistible home, either by having perfect finishing touches throughout or by a price that is truly remarkable compared to the most recent comparable sold homes. Buyers are going to be more and more hesitant to spend money on a home unless they feel like they have to. For buyers, the timing continues to be muddy. On one hand, home values are coming back down. On the other hand, your monetary value is probably suffering now too. The good news is that we are lucky to call the San Ramon Valley and the Greater Bay Area our home. We live in an area that can withstand some of the economic uncertainty in our country better than most. All that to say, if you are in the market to buy a home because a larger home or a smaller, easier space to maintain will improve your quality of life, this market is a good opportunity for you to have more negotiating leverage to set the price and terms of the deal. I hope this weekly summary and commentary helped you understand our market better and how it's affecting you. Let me know in the comments down below or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, share it with a friend. Hit the like button and subscribe so you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.